Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, January 10th. It is 6:40 as I'm starting the video here this morning. If you're new here, certainly thanks for stopping by. One thing we found is if you run the video at 1.5x, I think that'll be the right speed for you to not only move through the material quickly, but you can pause it or slow it down when there comes to something that you find particularly important, if you want to write down a level or something like that. So let's just do a quick recap of last week. We had some major wobbles in terms of the market, specifically tied to interest rates as they exploded, really whacking the interest rate sensitive sectors and causing the start of what I think is going to be a pretty violent, or has the potential to be a pretty violent sector rotation. Before we get into it, let's take a quick look at the pre-market. I have large caps and small caps essentially flat. NASDAQ down 0.4 already. Bitcoin down 1%. Gold has been toggling around $1,800, which I think it's been doing for like the last 6 months. So really hasn't gotten its legs or shown any signs of really wanting to explode. And I think a rising interest rate environment, just from a fundamental standpoint, should be a headwind, but we'll have to wait and see. Oil's pretty much flat. It has come off its recent highs. Nat gas is up nicely at 5%. And I think I saw copper up just a little bit. Today we don't have a whole lot on the macro front. I see wholesale inventories. But then in the back half of the week, it really picks up with some important data points. Tomorrow, Powell is up on Capitol Hill to start his confirmation hearings. I don't think anybody expects a problem, but there's always that potential for a surprise because he's going to get asked questions about inflation and balance sheet and interest rate hikes and how many are you going to do and when are you going to start and all that kind of stuff. That could be market moving, especially if there's a deviation from that. And also, I don't have the list here, but you'll see them on the blog site. Quite a number of Fed speakers this week. We've got I think 1 or 2 every day this week. So if there's some kind of more hawkish tone or deviation from the notes and the recent meeting, then there's the potential for fireworks. Then on Wednesday, it's a really important day. We've got a CPI print. There's also a 10-year bond auction on Wednesday. And then Thursday, of course, we've got the jobs report, but also we've got a PPI print, producer price index print, and a 30-year bond auction. Those bond auctions are going to be watched really closely. On the earnings front today, still slow start to the year. I see Tilray before the bell as being like the biggest one. I don't see a whole lot. Then Wednesday, we've got KB Homes. Thursday, Delta. And then Friday, the season truly kicks off with the big banks. We've got JP Morgan, Citi, Wells Fargo. And then rolling in the next week, we'll have more banks and stuff like that. So earnings season is really going to kick off. So let's dive into bond yields quickly. What I've done here is, if you'll recall, the big wobble started right after Thanksgiving on that Black Friday, with Omicron really blasting onto the news, and that cratered rates. And then, we bottomed out in early December and then have been grinding higher with some variability. And then beginning the new year, we blasted off from 1.5 all the way up to 1.75%. That's a pretty big move, pretty fast move. And so I've labeled this area here between Thanksgiving and the New Year as the Omicron wobble. So now I think for we traders, if we hold above the Omicron wobble, I think everything is hunky-dory, supportive of higher rates. If we get, if that CPI print comes in like really weak, then, and we get a big rug pull on rates, then the dynamic might change. You'd probably see the NASDAQ pop. You'd probably see the ARK complex pop. Some of these beaten down interest rate sensitive names pop on that fall. So we're going to have to be really aware of what's going on in the macro on those data releases later on this week. Here's the TLT. Of course, if rates are rising, TLT is falling. I dropped in a trend line off of the March lows of last year, and you can see we broke that trend line this past week after dropping out of this $5 box. So now, just from a technical target perspective, we're looking for at least a touch of 141. That would accomplish the $5 measured move and also revalidate these lows. So in order to get the next leg down, we would need to take out this 141. Now, I know that there are some of you that got short up here on the break of the box, the break of the 200, and the break of this trend line. If you got to move down to 141, I would be doing one of two things. I would certainly be covering your short for a potential bounce, and or being ready, if there isn't a bounce, being ready to roll those strikes down to 141, booking that win, buying some more time, and be ready to go on some kind of a break of 141. Now, the thing of it is that, heading into those CPI prints, there's not going to be any way to know. You're either going to have to, because that move will be so fast and it'll be in the pre-market that, there's going to be, I would imagine, a big move, especially if there's either a disappointment, inflation expectations much less than expected, or some kind of a blowout number really high. You're going to get a big bar on Wednesday. So it's going to be kind of tough. And that's why I say, if you're down around 141, take your profits and then see if, we get a break of 141 or it bounces. So I think that's the way to do it. I don't think it's prudent to, treat it just like an earnings. If you were sitting there in the money on your position and you got earnings, Wednesday, I'd always say book your winnings and then let the dust settle and find out what the next move is. So if there's a move down below 141, then you start looking lower to 139, down into this $5 consolidation box, down towards 134 if things really, really take off. So keep that in mind. What I want to do on SPY and the FATMAAN names is focus on the daily charts. On the indexes, I will show you the 2-hour and the 30-minute for you active traders. But then on the FATMAAN names, I just want to show you the daily charts, because I think what I'm going to show you is we are not in a full-on bear mode. We're in a consolidation, choppy, turbulent mode, but the all-out sell signals have not arrived yet. So I want to show you where those would be for me, and then you can decide, how you want to trade it. So, SPY, fake breakout, back into the range, still above the 50, still above the uptrend channel line down here around 463. We've got the 50 EMA 463.60 right here, as you can see. For me, if you're trading the daily time frame, your sell signal would come on not only a break of the 50, but a break of the uptrend line here around, let's just call it 462, right in that area. And then if that breaks, I would expect a move down to 450. Remember that was an important number back in November and early December as a level that was tagged. So those are the prior lows, and you can see them here. Here was a big test of the bottom of the channel, and even here we had a back test of that 450, and then we got a big bounce. So if you're a bull and you think we're going to new highs, then buying the 50, if we get a move into the 50 and the bottom of this channel where it looks like it's holding, it's always subjective to try a long there with a stop just below and see if we don't get this bounce, down and then bounce up like that. But all I'm saying is that's a really, really key spot on the chart, and you need to be aware of that. And here it is blown up on the 2-hour. We had the FOMC notes last week. We got this little fib bounce. Remember, last week, we said on a break of 475, for active traders, you want to be short. We had a gap down here. It blew through that. 470 was the breakout area. We said if it dropped below that, you could be short. And so we came down to support, largest volume over price bar on the chart. We got the bounce. The bounce came right back up into 470 resistance, perfect technical action, and got rejected. So now we're back down here with this little support band between 466 and let's call it 464.50. But then we've got the 50 EMA here at 463.60. So I would handle it this way. I wouldn't be too super amped up for a short right out of the gate, because we've got a band of support here and we've got the 50 right below it. I would assume that there's going to be a number of buyers. They're going to buy that 50, at least on the first tag. And then for me, a more substantial, meaningful sell signal will come on a break of the 50. And then, then we can look towards lower levels. And here's that 450 that we just talked about on the daily chart. And here's those prior lows back in early December. And then that would be my more or less a base case to look for a target on SPY down at 450. And remember, we've also got another reason to hone in on 450, and that's because we had a $20 trading range. We went out of that range. Now we came back in. Whenever you come back into a trading range after being outside, your target automatically becomes the bottom of the box, which is 450. So that's one factor. But we've got the 50 here, so I wouldn't get all excited right here. Once you get below the 50, if in fact that happens, then I think you can be short against the 50 and then look for these lower levels. And you can see it right here. I've got the 50 marked here at 463.5. We got the rug pull, the little kickback, came down, another little bounce, finishing here. You know, just wait. Just wait to see what happens around this 50 EMA level. And I think that's going to be not only the safest trade, but I think it's the right trade, because this 50 has been such an important line in the sand for all these months and months, and probably even years. QQQ, little bit busy chart. I apologize for that. Let me see if I can make sense of it for you. We had a $20 trading range between 380 and 400. We made two excursions. On the first excursion, turned out to be a fake breakout, came back into the range, then found the bottom of the box. Second excursion, turned out to be a fake breakout and put in a double top, came back into the range, found the bottom of the range down here at 380. So for this index, for QQQs, they're in the more or less the worst technical I can't say that. It's in a poor technical posture, and we're right at the level where, should we break below 380, and I'm not talking about 379.50, I'm talking about a break, and you'll know it when you see it. A break below 380 would target 360. Why? It's a $20 trading range, and we break below. That makes the target $20 lower. I've also done a measured move target off of the double top high. That puts it right down at 360 as well. And we've got the 200 coming in right above 360. So you've got three different elements there where I think, and they all kind of confirm each other. The double top measured move target, the measured move target from the breakdown of the box, and you've got the 200 at the same level that has not been tagged in a long, long time. So on a break of 380, I would be looking for 360. And then that would be what I call a real solid sell signal. Because right now, if you were a bull, this is the place where you'd want to buy, right? You're at support. You're at the bottom of the box. So if you think Qs are going higher, or if you think interest rates are going lower, then this is an objective place to buy and look for a run back up to the top of the box and possibly even break out and move higher. So 380 is definitely a big pivot point on the Qs. And you can see here on Friday, as they normally do, they park things right at the point where you have no idea what's going to happen. So you can think about it all weekend. Both the Bears and the Bulls really right here had that weekend risk. So we're right here at the prior lows. We're right at key support. I've got your next level below as a target on a breakdown. We know we're 0.4 lower on the pre-market. So if you're an active trader and we open lower with the gap above, and then you get that kickback rally into 380, and you have a sense, to close the opening gap and get a sense that it's dying there, that there's no power, because think about it, all this price action is now resistance. So if you got a drop below 380 and then a rally back into it that dies, that would give you a really, really nice entry short on the Qs. This particular view doesn't really add any information. All it does is show you that we had a little undercut back here that took it down to 378. So be aware that we could drop down to 378 and then, find support right there. So anything below that, it should go pretty darn fast. IWM. We had the rally off the bottom of the box up into this gap where we had multiple days where it tried to get through and it could not, got rejected. Now we are below the 200, and that comes in at essentially 218. So I think you can be short against 218 on the daily chart, and then you're looking for a move back down to 210 at the bottom of the box. You see it here on the 2-hour. We've got this was the initial move down. This was the fib kickback rally. And remember what we say all the time. When you see multiple candles trying to get through a level and just not being able to do it, that always sets up as an objective level to try a trade. If you look here, let me count them, 1, 2, 3, 4, 5, 6 candles, 12 hours of trading, could not take out 220. So if you got short there and you were patient, you can stay in that short and stay short, because price is below 217 now, with the door open to run down here to this gap at that is between 214 and 212, and then you've got a big level here at 210. That is the bottom of the box, and that has been support for over a year. Here's a little refinement on a 30-minute chart. You can see price here at 216. You got the gap, and then you've got the lower part of the box here, and you've got levels above if you get any kind of a kickback rally today. Let's get into the Fat Man names. Before I do so, I want to welcome new visitors to the YouTube channel. Thank you so much. If you appreciate technical analysis, if you want to get more objective and more profitable trades, hit the subscribe button and the alarm bell. Hit the post notifications. You'll get a notice when I post new content. And if you want to go the extra mile, jump over in the show notes. You'll find a link to the blog where you can drop in your email, and then morning, noon, or night, everything that I publish will go right to your email box. You won't have to hunt for it. And you'll also get an invite to our trading room, where we've got quite a number of motivated, aspiring traders that are supporting each other, trying to get better. And also, even if you're not able to participate live during market hours, it's a good thing to join, because then you can just flip through ideas after work or at your convenience or on weekends, whenever you have time, and see if you can pick up some tickers and some ideas on the chat flow that you wouldn't pick or see otherwise. There's a ton of stuff that pops up in the trading room that just never makes it to the videos or to the blog site. So anyways, okay. Facebook. More or less trapped in a range between 325 and 345. I think if you're a daily, trading on the daily time frame, You wait for either a breakout or a breakdown from that level. You can see that a breakdown below 325 would put it below the 200 EMA, and then that would target a move down towards 305 to 300. So I would have my alarms set on that, and I would have an alarm set at 345. And if you want, you can also set an alarm right here at the confluence. You can tell right here, you've got the 8-day, the 20-day, and the 50-day all right here at 335. You get a break above that, all those moving averages would likely act as support, and you could be looking, at that point for a move back up to the top of the box. So if you want to refine that a little bit further, you could alarm 335 at the 50 and then go long on a break above that. Apple still in bull mode, even though there's been some consolidation between 172.50 and 181, which was the prior high. So for me, this 172.50 is an important level. Why? Well, you're below the 20, so you've got to be tactically defensive if you've been a Apple bull the whole time, because once price moves below the 8 and the 20, just from our rules, you have to be tactically defensive, because if you lose 172.5, you're going to come down to the 50 EMA down here at 167, call it. So, but definitely for today, this 172.50 is going to be your pivot. Certainly not all is lost. Support is support until it isn't. And you can see that for 2 days, we've been sitting here right on this level. But until it breaks, you're either buying it here in the assumption that it will hold with a stop below, or you're waiting for a short entry on a break below, targeting 167 at the 50. And then we've got a much bigger support level down here below at 160. Tesla, $200 range, rejected 4 times across the top at 1,200. Now we're working our way down. We're sitting on the 50, but this 1,000 level is right below, and we've got a nice uptrend coming in right below that at around 960, something like that. So, what do we say? Well, let's start with this. 1,000 is a key level. It's the bottom of the box. If the bulls are truly going to save it, that's going to be a place where they're going to want to buy. If that breaks, there's another chance just below, around the 960 area. But below that, you'd be below the $200 box. So that would be targeting 800. And then if you lost the trend line, that would be like the next confirmation of a sell signal. And you can see the 200 is coming in here around 830. And then that will be a bigger area of support where I would expect some buyers. But if you're a bull, you don't want to see Tesla drop out of this consolidation range. And you certainly don't want to see it break below the uptrend line on the daily chart. Moving on to Microsoft, very weak, rejected 3 times across the top at the highs, now came down, broke this really critical level here at 321, came down. I'm calling this gap filled. So today, use 315 as your pivot, but you can see we're in no man's land here with this big void. If you got a kickback rally into 321, I would be shorting it there, because all of this is now resistance. And if you get a little move back that dies, I would consider that a Fibonacci bounce and a back test of the breakdown. We've seen that move 100 times. So I would be looking to short right there. My expectation for this is, since it's in no man's land, there's not really much technical support here. I expect it to find 305. Why? Because that's the back test of the breakout from back here. And now I think that's where price is going to go. And then we'll really know what's going on with Microsoft and probably FATMAAN at large, because you break below the breakout backtest level, then you're looking at the 200, and we'll have bigger fish to fry to the downside if we lose this 305 level. Amazon, weak as well. We had a trend line drawn in here. We lost that on Thursday and Friday. We're sitting here at this 32.50. I think that's your pivot for the next day or so, depending on what happens. Your first level of support is to down here at 31.75 at these prior lows. If that were to break, I think you're coming down here to 29.50. Remember, this chart looks like a lot like the Qs. We had a fake breakout here, came way down. We had a fake breakout here, came back into the range. We didn't make it to the bottom, but this time, if we lose 31.75, I think we're going to come down here to 29.50 at the bottom of this 600 wide consolidation. So Amazon traders need to keep that 32.50 in focus today, and 31.75 highlighted on the chart. Google, we got a prior low down here at, we can call it 2,700. It's really a little bit less than that, maybe 2690. I've got it as a zone of support. We found some support here at 2750. I think that's your pivot. If you got a kickback rally to 2800, remember, all this is now resistance. I would be trying to short that at 2800 if you got a kickback rally into that level with a stop just above, because that would look like a fib rally and a back test, not anything other than that, unless it took out your stop, and then that thesis would be wrong. But I think it's going to come down here, test this 200 at a minimum, and then we can take it from there. Netflix has already fallen back into this $90 range that we have been talking about. I put on the fibs for this down move, and so you can use Friday's low as a pivot. If you break below it, you can be short. If you got a kickback rally up into 560 or even the 200 at 580, I would be a seller there. You've got a solid downtrend in place. Now you're inside of this box. 90 from 560 is 470 way down here, and that's your technical target at this point, with probably some intermediate stops along the way. But you got to be looking to the downside on Netflix. SMH, $22 trading range, a couple of fake breakouts, a couple of bad days of selling, sitting on the 50. Aggressive traders can use the 50 as a pivot point today. Otherwise, I think you got to wait until price gets down here to 290. And if you were to break below 290, then your next objective would be 275 right here where it broke out from. But that is a pretty sizable trading range, and it looks, just from the price action last week, looks like it wants to come down and test this 290. If it does that, that would be an objective place to try a long with a stop just below for a bounce. But if it breaks, then you got to be on the short side of that, looking for a move like $20 lower. We had on Friday, I sent this out, ITB, double top, broke this support level at 76. You can be short against 76. This is going to be an interest rate play. I've got the measured move target down here at 69.5 based on this structure. But keep in mind, we've got the 200 coming in, etc. That'll provide some support. And we've got a large volume over price bar right here at 72. So, and remember, there was a big buyer of, what was it? The February 75, 65 put spread. I think he bought that 1,850 times on Friday. So he's looking for a move to test these prior lows down here at 66. It remains to be seen whether he'll get that, but just based on the chart, I think you can stay short against 76 with a stop just above. This is a trade a lot of us are in, XBI short. We got short on the break of 108. We got some follow through on Friday. If for any reason we get a move down towards 97.50 or 95, I would be taking it off there. I'd be booking profits. A lot of us are in the February 105s. Some are in the January 105s. So those only have a couple weeks to play out. So just keep in mind, whatever you're in, keep an eye on it, and don't let an expiration sneak up on you, especially if we get a move down to 95, because then we can use that as our new pivot down below. Just a quick run through ARK. Not a ton happening on Friday. We did move a little bit lower. A lot of us are short against 39. That still looks good. Genomics, we got short against 58. That still looks good. ARK Innovation has a lot of Tesla in it. We got a little move down on Friday. That still looks good. Got short against 90. And then finally, ARK Web is down at this 106 level. Got some follow through. And the other day, I gave you targets on the weekly charts on these names. And if you are new to the channel, just pull up your weekly charts of these, and the targets are fairly apparent. So let's wrap it up there. Hope you guys have a good week of trading. Remember, stay objective. Honor your stops, and you won't get hurt. And that's the key. Your first obligation is capital preservation. Your second thing after that is to start making money by taking very objective trades against well-defined levels and then honoring your stops. And then if you do that, I think you'll find you'll have an expanding P&L. So something to shoot for this week. This has been Chris Buss with Traders Profit Compass. Talk to you next time.